Thank you for joining us here today. I'm happy to talk about Canalaska here and our new high-grade discovery that John mentioned at the Pike Zone. Okay, some forward-looking statements, obviously. So coming out of 2023, Canalaska had two major discoveries here on the horizon. And the first one is the Pike Zone. It's our West MacArthur project. We're joint ventured with Cameco. The second one is our discovery at Moon Lake South with our partner in Denison Mines. So today I'm going to focus on the Pike Zone here with the new results that we just had a few months ago. So very quickly, corporate structure, share prices floating around 60 cents right now. About 155 million shares outstanding. It's about 200 million fully diluted, and a market cap just south of $100 million. And very importantly, we have cash in the bank. We've got about $12 million to work with that should allow us to do everything we'd like to in 2024. I'm going to very quickly go through the management team. So myself and Corey are both here. If you've got any questions, you can swing by our table there after. We've got a board that's got a very strong uranium discovery and market experience and backs and supports what we do. I'm not going to talk too much about the fundamentals here behind uranium. John touched on quite a bit of it here, and he mentioned the small modular reactors. You know, I think the important piece from the junior perspective is when these small modular reactors start coming online, what that means is more uranium is required. So looking at the current outlook for uranium, it's really interesting that this is actually the first time in history where the projected demand is actually outstripping production and secondary supply. And this is a key piece to the uranium story right now and why the market is heating up the way it is. If you look at the graph on the right there, that's from UXC, the consulting company. And you look at that supply gap that's on the right there, we're looking at a 1.5 billion pound supply gap. That's 2 MacArthur rivers in a can to fill that. That doesn't include any of these SMRs that we talked about, the restarts, the extensions. So that's a very conservative supply-demand curve that we're dealing with right now. And to incentivize that production, and John mentioned this, what we need is the price to continue to rise. So we're sitting at $90 a pound right now. I'd argue that it's barely high enough to even bring on some of that secondary tier 2 discoveries in the world, that we need to go much higher than this. So the fundamentals in uranium right now are better than they've ever been. So on to Canalaska. What do we do? Who are we? We're an active explorer and project generator. So what that means is that we take our shareholder capital, we deploy that into a few key projects in the portfolio that we believe have the best chance of discovery. We have access to over 500,000 hectares focused on the eastern Athabasca. It's northern Saskatchewan, one of the best places in the world to find uranium. With the projects that we consider to be tier 2 or maybe slightly riskier ideas, we project generate those so that we bring in other companies and their shareholder capital to move those forward. And I'll talk a little bit about that at the very end here. So we just did a raise last November, $12 million to move our 2024 programs ahead. And the main focus there is on West MacArthur. And I'm going to just jump right ahead to that. So the West MacArthur project here is located in the eastern Athabasca. So I was at MIF about 18 months ago, talking about the Pike Zone discovery. So in 2022, in the summer of 2022, we drilled the first hole into this discovery, and then we've been working on it for the last 18 months. And it's located just about 10 to 15 kilometers west of the MacArthur River mine. So the world's highest grade, richest uranium mine owned by Cameco, just 15 kilometers away along strike. And we're on a corridor called the C10 that stretches along strike to the south there. And you can see the Pike Zone. I want to party in the back. You can see the Pike Zone there just down in the corner of that. And now this is a high-grade corridor. It's got multiple discoveries along it. So at the end of 2023, where we came out of the summer program, we delineated over to about 160 meters down into the basement here and about 200 meters at the unconformity. The team took all these drill holes that we had, started to put the structural model together. These uranium deposits in the basement are structurally controlled. There's a lot of complex interplay between those structures that develops the high grades and forms these larger pods. So we went out in the winter of 2024, the first hole back at the Pike Zone, and intersected 17 meters at just about 14% equivalent uranium. So these are radiometric equivalent grades. We do these with our downhole probing, so we're still subject to assays that we're expecting in the next, hopefully 2 to 3 weeks to put those out. But what we're starting to see now, before this drill hole, we had seen the grades. We had upwards of 25%, but over smaller widths. Now we're starting to see significant grades, significant widths, right where we expect it to be at the unconformity. So what's that actually look like? So this is a photo of the discovery hole here at the unconformity 82-4. And you can see the top red box there, those dark blacks, the really nice yellows and oranges. That's what high-grade uranium mineralization looks like, especially if you look at that the one block right here, uranium steel in a box here. So we're dealing with some extremely high-grade uranium in this system. So we followed that up with a second drill hole. We announced at the end of March here. Another 11 meters at about 11% equivalent U3O8. So we're starting to see continuity to this discovery on this fence. And so what's that look like actually on section? So if you take a cut through the 3 drill holes that were completed on Pike this winter, you'll see the discovery hole here to the south, the follow-up hole just to the north of it, and an additional mineralized hole further north of that. What we're looking at right now, for context, if you take the McArthur River mine, so the Zone 2 deposit at McArthur River, it holds about 350 million pounds. It would fit in the gap that we have here, down dip into the basement. So as a company here, our goals are very clear over the next few months here. We're going to be back drilling here at the start of June. We'll have 2 drills back in the Pike Zone area. Step 1 is to close that fence. Start stepping behind that discovery hole, see how far this thing moves along in that direction. Step 2 will be to start stepping out methodically from that discovery. We know where the mineralization is right now. Let's start stepping out, see how big this thing can grow to. So we should be back, as I mentioned, right at the start of June here with 2 drills going right away. That's just a picture of the second hole there. You can see the same colors in there, those nice blacks, yellows, oranges, this high-grade uranium, very altered, lots of clay alteration in the system here. So we're seeing all the signs of a good tier 1. Now, we've been very clear about what we do when we explore. We as a company, we look for tier 1 deposits. We're not looking for small systems. We want to find larger systems that are along these trends. So typically, these deposits will form as pearls on a string. So when you look at a trend like this, you might have a discovery like our 42 zone up here in the north. That was one of the first intersections of high-grade mineralization on the project. Or something like our Pike Zone, but there's still lots of space. So the C10 corridor itself on the West McArthur project is actually 15 kilometers long. We've really only tested the surface on this, so we are also looking at other opportunities for discovery on this, essentially other satellites to the Pike Zone. So why is this all important? You know, what's the strategic opportunity here, and why Canalaska? So I mentioned our partner is Cameco. You can see on the left there we have an intentionally outdated graph. And what that shows is McArthur River mine restart. So if you look at Cameco's MD&A, it's very simple math. McArthur tells you how much, or Cameco tells you how much they're going to produce out of McArthur River. If you take their projection and you take their reserves they have in the ground, you've got about 15 years of potential reserves left at McArthur River. A little bit north of McArthur River is a Cigar Lake deposit. Those pounds go to the McLean Lake mill. Cameco also tells you in their MD&A they'll be done producing at Cigar in 2036. That means 15 years from now, 20% of global uranium production in the Athabasca is gone. And I don't think the market is waking up to this. If we found it today, with the regulatory regime that we work in Canada, you would not be able to get it into production in time to fill that gap. There is no tier 1 deposit in the Eastern Athabasca today that can replace these pounds. And that's where the strategic opportunity comes with Canalaska. We have a partner in Cameco who has a mill. They're going to need feed for that mill. We have a discovery on a corridor where Cameco also has a discovery in the Fox Lake deposit. And we've got high grades here. So we're 15 kilometers away from the McArthur River mine. This is a satellite to something like that. So we've got a great opportunity here to immediately put any production, or any discovery into production quick in this jurisdiction. And I did I'll very quickly talk here about exploration opportunities. So we are a project generator. We're active explorer and project generator. We have access to about 500,000 hectares in the Eastern Athabasca. We've deliberately focused our portfolio in the Eastern Athabasca for that reason I just mentioned with the 2 mills that need that capacity. In the last 18 months as a company, we've done $44 million in deals. Now, $44 million represents $44 million worth of exploration. If these deals all come to fruition, go the full length of the option, that would be $44 million worth of exploration spend into the ground in our portfolio with other companies' shareholders' money, not our shareholders' money. This doesn't include the cash shares and the other royalties and whatnot that come alongside these. So Canalaska, I think right now we're positioned in a great spot. We actively have the project and active explorer model. We're tied to major industry partners in Cameco and Denison, and we're working on a brand new high-grade discovery. So if you've got any questions, please feel free to come by the table, and we're happy to answer them.